BTS just delivered one of the biggest quarters in the history of their company. Record revenue, record profit. A world tour packed with sold-out stadiums. And in less than 24 hours, more than $1.9 billion vanished from that same company's value. No scandal broke that day. No member made headlines. So how does a company post record numbers and lose almost $2 billion overnight? That's the story we're telling today. This is the story of Hybe, the label behind BTS, and the strangest stock crash the K-pop industry has seen in years. On paper, everything looked perfect. BTS had just wrapped one of their most successful stretches ever, with concerts across multiple continents and a halftime performance watched by millions during the FIFA World Cup final. Behind the scenes, Hybe's second quarter numbers were about to confirm what fans already knew. The group's comeback was a financial monster. But on Wall Street and on the Korea Exchange, good news doesn't always mean good news. Sometimes it means something else entirely. And this week, investors made that painfully clear. Chapter 1. The numbers that should have been a celebration. Let's start with what actually happened. Because on the surface, this should have been one of the best weeks in Hybe's history. The company reported record-breaking revenue and record-breaking operating profit for the second quarter of 2026. Those aren't small milestones. Those are the two numbers every entertainment company lives and dies by. And BTS, fresh off military service and back together as a full group, was the engine driving almost all of it. Their world tour was packing arenas. Their comeback album was topping charts. By every traditional measure, this was Hybe at the peak of its power. So when the earnings report landed, everyone expected the stock to celebrate right along with it. Instead, it did the opposite. Chapter 2. The crash. The day the numbers came out, Hybe's stock didn't just dip, it collapsed. Shares tanked more than 16% in a single trading day, marking the company's worst day on the market since June of 2022. That's not a normal correction. That's the kind of drop that wipes out months of gains in a matter of hours. But the story didn't end there. The very next day, the stock kept falling, tumbling another 16% and dragging Hybe's share price down to its lowest point since September of 2024. In under 24 hours, roughly $1.96 billion was erased from the company's market value. Let that sink in. BTS had one of the strongest quarters of their entire career, and the market punished Hybe anyway. So what actually went wrong? Chapter 3. The hidden problem behind the record numbers. To understand this crash, you have to look past the headline numbers and into something most fans never think about: profit margins. Analysts who studied the earnings report found the real issue wasn't revenue. Revenue was fine. It was record-breaking, in fact. The problem was how much of that revenue Hybe actually got to keep. Here's why. A huge portion of this quarter's income came from touring. Concert revenue from established, veteran artists like BTS tends to come with significantly higher costs attached. Things like elaborate production, logistics, and artist settlement payments that eat into the bottom line. Investors, on the other hand, had been expecting the bigger driver of profit to be merchandise. Merchandise sales typically carry far higher profit margins than touring does, sometimes as much as 50%. When the earnings report showed that concerts, not merchandise, made up the larger share of the revenue mix, the math simply didn't add up the way Wall Street wanted it to. In other words, BTS filled the stadiums, But the cost of filling those stadiums quietly ate away at the profit those very ticket sales were supposed to generate. It's a strange kind of problem. Success, in this case, came with a price tag that investors weren't ready to accept. Chapter 4. A company already under pressure. But here's what makes this crash even more significant. This didn't happen in a vacuum. Hybe was already dealing with serious legal pressure heading into this earnings report. South Korea's National Tax Service had opened an audit into the company's headquarters, examining allegations tied to its 2019 pre-IPO share dealings. At the same time, founder and chairman Bang Si-hyuk has remained under investigation over accusations that he misled early investors before the company went public, allegedly allowing certain parties to profit once Hybe's stock began trading. Police had gone as far as requesting an arrest warrant for Bang earlier this year. Prosecutors ultimately rejected that request, citing insufficient evidence, and sent the case back for further investigation. That process is still ongoing. So when this stock crash hit, it didn't land on a company enjoying a clean, quiet year. It landed on a company already under a legal microscope, one where investor confidence was already fragile before a single earnings number was even released. For some analysts, that context matters just as much as the margin numbers themselves. A record quarter wrapped inside a year of legal uncertainty doesn't inspire the same confidence it normally would. Chapter 5. A pattern fans are starting to notice. And here's the detail a lot of casual observers missed. This isn't the first time in 2026 that BTS's return to the spotlight has triggered a drop in Hybe stock. Earlier this year, when the group's comeback concert in Seoul drew a smaller crowd that analysts had forecast, Hybe shares fell as well. Two very different situations, two very different reasons, but the same result. BTS delivers, and somehow the market reacts with uncertainty rather than confidence. Some fans online have started asking a pointed question. If record profit and sold-out world tours aren't enough to satisfy investors, what exactly would be? It's a fair question, and right now, nobody at Hybe has offered a clear answer. At the center of all this are 7 artists who did exactly what they were supposed to do. They toured, they performed, they delivered a comeback that broke records by any reasonable measure. And yet, the company built around them is now facing one of its roughest stretches on the stock market in years, caught between thin profit margins, high production costs, and a legal cloud that refuses to clear. It's a reminder that in the music industry, especially at this level, success and financial stability don't always move in the same direction. Sometimes the biggest triumphs on stage create the hardest questions in the boardroom. Whether Hybe can steady itself and whether investors will regain confidence before the next earnings report is still an open question. So here's what we want to know from you. Do you think this crash is really about the numbers, or is it about everything else happening around Hybe right now? Let us know in the comments. If you enjoyed this documentary from Zenk Pop, don't forget to like this video, subscribe to the channel, and turn on the bell icon so you never miss our next story.